Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the euro currency. So today in the fundamental report we have taken a look at a couple of moments. First of all, we were actually particularly interested with the inflation statistics that we've got this week. And particularly speaking, the gap, the difference between the producer index and consumer index. So, and explained why the rising gap between these two indicators is really a bad thing. So it's mostly unavoidably lead us to recession. And but the problem is that the wide opinion among the investors currently stand around the soft landing. And actually, as you could see on the news lines and actually in an analysis, reports that everybody stands in euphoria that inflation is slowed down, and actually it seems that we're coming closer to the end of the tightening rate cycle, soon turning to the growth, and everything should be great. And we have tried to investigate the subject a bit in the fundamental report, taking a look at the current situation and what we could expect in the nearest future. So our results of this investigation actually not really very rosy. It's just because we think that market has actually too short-lived view on the situation, too narrow view on the situation. They are just living from the one statistics released to another, making all attention, taking all attention to the most recent data and to not considering the overall situation in general. And we suspect that, yes, euro has currently some time limit, a few months, probably 2-3 months, where it could keep the bullish trend, but this will last until the first evident problems with the liquidity in the United States will appear. By our calculation, that should happen somewhere in the beginning of the fall of the 2023. There are a few things that point at this moment. First of all, you could see a rebound of the real estate market, which is actually will increase the inflationary pressure. This is first. Second, Fed and United States Treasury has some liquidity reserves in the way of the reverse repo balance, banking reserves, but not totally, but only small part of it, approximately around 700 billions. We explained this moment in our report. And also the cash balance of the Fed on the United States Treasury account on the Fed. But the problem is that demand for the money, for the funds, in the United States Treasury is significantly higher. And when these reserves will exhaust, the rates will start rising again. And rising rates, as you understand, is increasing the attractiveness of the United States dollar. Although this is, well, some kind of the paradox, but this is as it stands in reality. So the dollar could fall under the inflation only when it's really will be absolute disaster. But in the first stage, when in the current situation, the rising of the interest rates, it will be supportive to the United States dollar and more attractive, especially when you take a look at the balance between the real inflation in the United States and the European Union and the balance of the interest rates. The core difference stands in favor of the United States dollar. That will increase its attractiveness. So that's why we're not really fans of this recent euphoria. That's, well, this is long-term, starting of the long-term bull trend on the euro currency, and dollar will collapse further. It's not necessary. And we think that our conclusion is that euro currency could rise and now it is opening the new trading range somewhere from the 113 to the 116 area, where it could fluctuate in the nearest few months. But in the longer term perspective, dollar could return back to the growing stage, and it's not resolved everything yet. It's not decided everything. That's what about the fundamental longer term picture. In the shorter term, no doubts that market currently has bullish sentiment with this recent performance. And it's understandable, but situation stands relatively simple to us. We are not considering taking new shorts just because of the performance. But at the same time, we're not considering any new longs currently on the shorter term perspective, just because market stands overextended. So it stands at the overbought on the daily chart and on the completing target of the butterfly and the ABCD OP. But if you'll take a look at our weekly analysis, you will see that market also stands at the weekly overbought, and it stands at a strong confidence resistance on the weekly chart, 1235, 1275. Obviously, this is not the good point for taking the new long position, especially if you trade on the daily and weekly charts. So it means the only single way is open to us. We're considering the pullback, the reaction of the market on this area. So if you trade on the weekly and daily chart and you have bullish context and you consider taking the long position, it means that you could not take any short positions. You just need to wait when the pullback will happen, and then you could take the position at much better price levels. Those of you who trade on a daily and intraday basis, you could keep an eye on the bearish signs and a possible pullback here to the downside. The one point that we're watching for is some final upper direction somewhere to the 1275 by the reasons that we have specified in the weekly analysis on the weekly chart. And once this spike will happen, it might be the point where reversal could start. Reversal, I mean short-term reversal for just reaction on a strong resistance area. But nevertheless, the pullback here might be more or less moderate, just because we have a butterfly and even 30% retracement here could lead market back to the 111 area. So it might be not really very small move. On the 4-hour time frame chart and on lower time frames, it is still unclear in what manner market could start this reaction. We do not have any clear patterns except the butterfly on the daily chart. But we have great thrust here. And I would be really happy if we will get here some kind of the double repo sell pattern with the spike up to the 1275 first. So when it will happen, then return it back down, forming the double repo. That might be great pattern to consider for taking the short position. Maybe some other patterns will be formed. Maybe market will form just head and shoulders, minor head and shoulders on the hourly chart with the head around 1275. This also will be great. It's no problems at all. Whatever pattern will be formed, our task here is trying to catch signs of the reversal, short-term reaction in strong resistance area, and trying to take the position, short position, those who would like to do this, with the anticipation of the possible reaction downside retracement due to the very strong resistance where market stands right now. We would not recommend to take position immediately, just because of this type of action. So it's not safe actually to argue and go against this kind of the momentum. In such circumstances, when you see market at strong resistance but you have very strong upward action, the only solution is to get the patterns first, when the market already is prepared to show the reaction. That will be much safer. So that's what we intend to do on the next week.